Hello, I'm Brett Lewis, the founder and managing director of Strong Tower Wealth Management. The fact that you're viewing this video means that you're wanting to get a better understanding of what we at Strong Tower do for our clients and how we may be a resource for you and your family. We're not going to use actors, fancy production, or overblown graphics. We're going to have a simple conversation. Now, the most important aspect of this conversation is you. Maybe you're new to investing. Maybe you're approaching retirement or in retirement and looking to entrust someone with those assets. Perhaps you're currently investing, and if you are you willing to look under the hood to see what you're currently doing, understand what you're invested in, what those investments are costing, what the risks are with those investments? We're going to discuss who we are, what we do, and what we do not do. We're going to discuss the main topics in this video, and in subsequent videos go into more detail about them. One of the reasons we launched Strong Tower Wealth Management after 22 years of working for other companies and other companies telling us what to buy or sell or use their certain research departments. We did this because, again, we felt there was a better way. Who we are. Strong Tower Wealth Management is a full-service, comprehensive wealth and asset management firm. As a fiduciary, we provide financial planning, cash flow, budgeting. We do estate planning, and we will coordinate with your CPA or your attorney. We also utilize long-term care insurance and life insurance, again, as a way to execute your estate plan. We're an asset management firm. We manage 3 portfolios: growth, growth and income, and aggressive growth where appropriate. We are fee-only advisors. As a fee-only asset manager, we are typically less expensive than other firms in the fees that they charge. What we do. We provide a process that's adaptable and flexible according to market conditions. We are engaged in the daily direct management of our clients' accounts. We do the research, we determine the allocations. We determine how conservative or aggressive to be in the market based upon market conditions. We are the decision makers on the account. We are constantly reviewing your positions, and we do that on a daily basis. And we do that by keeping a manageable number of positions in your account and in our models. At Strong Tower Wealth Management, we manage the assets in-house. We also have complete fee transparency. We only charge an external fee to our clients, and that fee has to be approved and signed off on by you. We will show you our fee schedule, and we'll also show you where it comes out on your statement. There are no internal fees. Other firms have internal management fees on their investments. Now, what is an internal fee? An internal fee on mutual funds is your administrative, management, and expense fees. So all total, the internal fees may be 1% or more. And then typically your advisor charges an external fee on top of that. So the fees that you may be charged are over 2%, and the average annual management fee for a Strong Tower Wealth Management client is roughly 1%. At Strong Tower Wealth Management, our goal is simple. We always want to make sure that our clients own the best of class, the strongest stocks in the market. Yes, that leadership changes from time to time, sometimes very aggressively. Market volatility increases, so we have to move a little quicker. When we have increased times of volatility, then raising cash and being defensive becomes even more important. But wouldn't you like someone managing your account on a daily basis, reviewing your positions every day? I say that because I'm reviewing every position we own within our 3 models every single day. I'm looking for other areas of opportunity. I'm looking for leadership changes. Isn't that what you're paying for? You're paying for someone to manage your money. In our opinion, if you're not managing the positions in your portfolio properly, then you're going to have difficulty reaching your retirement asset goal. What we do not do. We do not outsource your investment management to someone else, to a research department, or to a money manager. We do not believe that buy and hold will ultimately provide the solutions for your retirement assets. We don't set it and forget it and hope it works out. And we do not believe in passive management strategies. Now, what is that? Passive management strategies are your typical asset allocation models. We do believe in asset allocation is a vital part of investing your money. But, however, you can be over-diversified. You can be in areas of the market that are losing money. and we would prefer to take that money and overweight it to a stronger area of the market. So by being over-diversified, you can actually cannibalize your investment returns. If you have a market allocation, then you can expect market returns. Why we do what we do? Because most advisors and firms don't. Charting an appropriate investment strategy in today's investment environment is getting increasingly difficult, mainly due to inappropriate risk management and defensive strategies within your account, and also lack of qualified investment advice. This industry has become very commoditized over the last several years. Companies have discouraged their advisors from doing research or their own due diligence to determine if a position or a group of investments need to be put into a client's account. They want the advisor to manage the relationship with their client, and that's important. But they want you to outsource the investment management of your funds to their research department, their mutual fund department. In other words, to someone else. So it actually minimizes the involvement of the advisor really within your accounts, in your portfolios. My question is, if it's being managed by someone else, why are you paying for that advice? You can go do that somewhere else for free, because in the absence of value, price is the only consideration. Too often in today's investing environment, the advisor is interested in managing the relationship, not the investments within your account. Think about this. If your advisor were to move firms or to leave the industry altogether, and by the way, 80% of the people in this business don't make it 5 years in this business. But suppose they leave the firm. They reassign your account to another advisor, and the firm may even offer to discount your fees for that year or for a period of time, to keep your business. So if they're willing to discount what they do for their clients in order to keep the business, is the advisory relationship really that important? Or is the company just more concerned about keeping your assets, charging you a fee, and generating revenue for their company? Honestly, I think you know the answer to that.